You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 6th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. Now the first one, that's our live training room, so it's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us a little later in the broadcast, he'll walk you through step by step. It's a piece of cake, and there's no credit card required. Also, when you take the trial, you're not just getting access to the live training room each day. You're actually getting access to everything our passport holders have access to for the entire 5 days, with only one exception, and that's the members-only workshop on Thursday night. So for 5 days, we're going to treat you just like you're a passport holder. No credit card required. We want you to have a clear head so that at the end of the trial, you can make a well-informed and intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways to join this afternoon broadcast live. Best way, go to mytradingiq.com, scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen is every trading day going forward, you'll get an email about an hour before this broadcast starts. In the email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit of doing it that way is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days that you're out of the office, away from the desktop, but you'd still like to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. Well, you can do both of those via our YouTube channel, which is pretty easy to remember. youtube.com/CFRN. Probably already have the YouTube part memorized, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you won't watch them all, but pick a few days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. Do the same thing. You get the idea. You literally are able to see how we've evolved over the years. youtube.com/CFRN. Our daily schedule, we start with our devotional, word of prayer, some market news. Then we get into the charts, do a recap of the Logic 247 alerts, the concierge trade alerts. About 12:50, Michael will join us, give us a recap of everything that happened this morning in the live training room. And then at the top of the hour, we'll go live on the TradingView platform, do some live trading for a half hour. Then I'll be back and I'll finish up the recap of the alerts if I haven't already. And we'll wrap things up with our good word for the day. That is our schedule each and every day. Now today we're going to talk about arguing for a minute. Our scripture is Psalm 42, verse 5, from the Message translation. Why are you down in the dumps, dear soul? Why are you crying the blues? Fix my eyes on God. Soon I'll be praising again. He puts a smile on my face. He's my God. Now that's David, King David, talking to himself. Arguing is usually a big waste of time and energy, but there is something to be said for arguing with yourself. In fact, it's a very biblical thing to do. Go ahead and speak truth and hope into your own soul. That's what the psalmist did when he was in distress and felt himself slipping into a dark place. He spoke directly to his own heart. Why, my soul, are you downcast? Why so disturbed within me? Put your hope in God, for I will yet praise him, my Savior and my God. Maybe you've been listening to too many negative, hopeless voices on the nightly news, in the carpool, or just on the phone with friends. Maybe the evil one has been whispering words of death, defeat, and futility into your ear. Well, it's time to set the record straight. Declare the truth about who you are in Christ. Remind your soul that Jesus is your help and hope, that the Father deeply loves you, and that your future is secure in heaven. Join me in a word of prayer. Heavenly Father, we've all listened too long to cynical words, dark thoughts, anxieties that buzz around our head like bees. Lord, help us to speak life and peace into our own soul by the power of your indwelling Holy Spirit. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. We talked yesterday about maybe there'd be a turnaround Tuesday, and the markets are bouncing today after yesterday's historical sell-off. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. The Dow's up 469 points, almost 1.25%. The Nasdaq's up 288. That's 1.75%. S&P 500 is up 88 points. That's 1.75%. And the Russell 2000, our man of the street, is up 21 points. That's a little over 1%. In the commodity basket, crude oil up 67 cents, trading 73.58 last. That's a gain of almost 1%. Gold, on the other hand, down $16, trading 24.2860 last. And silver down 2 pennies, trading 27.18 last. In the Asian markets at the close, Nikkei posted a gain. Now, Nikkei was down 12,000 points yesterday, but today it's up 3,217, almost 10%. The Shanghai gained 6. The Hang Seng dropped 51. And in the European markets at the close, FTSE up 18, the DAX down 17, the CAC down 19. No movers, no shakers there. So, it was a mixed day in Asia. It was a mixed day for the UK. So far, it's a big green radio Tuesday here in the US of A. Let's take a peek at some of the news out there. This is courtesy of Reuters, the New York office. Investors said the aftershocks of a massive carry trade that has reverberated through global financial markets isn't done yet, with more unwinding in the days ahead, raising the risk of shakeouts to other assets. The Nasdaq Composite and the S&P 500 trimmed losses by the close yesterday, capping off a brutal 3-day sell-off, while Tokyo markets rebounded from a singular rout in trading today. The massive sell-offs have come after a higher than expected U.S. unemployment rate on Friday sparked worries the U.S. economy was headed for a recession. Concerns about the markets were exacerbated by investors winding down yen-funded trades that had been used to finance the acquisition of stocks for years after a surprise Bank of Japan rate hike last week. Nobody saw that coming. Well, maybe a few people did. The so-called carry trade is commonly used in currency markets where investors borrow money from economies with low interest rates, such as Japan or Switzerland, to fund investments in higher yielding assets, this time stocks, elsewhere. Despite the easing off in selling, investors were worried about more volatility ahead. We expect the sell-off to continue for maybe a few more days, as usually these trades are pretty large. That's from the head of diversifying strategies at TIF Investment Management. Z went on to say, people said, wait, we're losing too much money from unwinding. Let's just hold and we'll unwind some more tomorrow. The complete unwind of this yen-funded trade is likely to take days, potentially extending the market route. There's tons and tons of yen carry trades that still have to be closed out. According to Ulf Lindahl, the CEO at Currency Research Associates. Investors are still scrambling to figure out the size of those trades and how much of the cheap funding was deployed in equities. Calculations made by hedge fund research firm Pivotal Path show that hedge fund strategies most affected by a yen rally are global, macro, quantitative, and managed futures, as they have short exposure to the Japanese currency. A spike in the yen this month indicates a loss of between 1.5% and 2.5% in August for those funds indexes. It's very, very hard to know what the actual size of those positions are and how much is hedged and how much isn't hedged, and therefore how much pressure is really on. That came from Kathy Jones, the fixed income strategist over at Schwab, who, by the way, turned the lights out yesterday, or had their lights turned out during much of the sell-off. Overnight carnage in Asian markets sent U.S. stock futures off as much as 6% in the pre-dawn hours on Monday, created a new strain of worry about the state of the yen carry trade. I mean, that's just the big talk all over Wall Street, the yen carry trade. Price of cryptocurrencies captured the breadth of the risk-off move in markets as Bitcoin and Ether tumbled towards some of their largest one-week losses since the collapse of FTX. Several U.S. online brokers appeared to struggle with connectivity issues in the early going yesterday as investors rushed to check their portfolios or perhaps move in or out of positions during the early chaos. In a landmark ruling, Alphabet's Google illegally monopolizes web search, also came with a rebuke for the tech giant for obscuring potential evidence in the case, and a warning to other companies about safeguarding data. U.S. District Judge Amit Mehta in Washington, D.C., lambasted Google for allegedly failing to preserve internal chats and abusing protections for legal communications, but he declined to formally sanction the company. You don't want to tick off Silicon Valley. Now, the U.S. Justice Department had asked Meta to punish Google for what the government called its systematic destruction of employee messages and flagrant misuse of the attorney-client privilege that shields communication with lawyers. Meta said it was not necessary to rule on Google's evidence handling to decide whether the company violated the antitrust law. Still, the court is taken aback by the lengths to which Google goes to avoid creating a paper trail for regulators and litigants. Google trained its employees rather effectively not to create bad evidence. That's from a federal judge. Let's go to the Mideast. Iran faces a dilemma over how to deliver a meaningful blow to Israel without prompting a war that could engulf the entire Middle East. That challenge appears to be delaying an attack that was widely thought to be imminent days ago. A senior advisor from the International Crisis Group said Iran is stuck between a rock and a hard place. It's going to want to retaliate in a way that's significant enough to deter Israel from increasing the escalation spiral. But it's not going to want to do something to prompt a regional war that will drag the U.S. in. Iran has said it wants to punish Israel for last week's assassination of a leading Hamas figure in Tehran, but not to the point of starting a region-wide war. It's emphasized the need to reestablish deterrence against its archenemy, which has neither confirmed nor denied being responsible for the death of Ismail Haniyeh. It could choose to target military sites in Israel, similar to the rocket and drone barrage it carried out in April. That did minimal damage, partly because the move was effectively telegraphed in advance, helping the Israeli Air Force shoot down the vast majority of the projectiles with help from the US, UK, France, and Jordan. Under pressure from the U.S., Israel responded with a limited strike on an Iranian air base that meant tensions soon eased. Now, if it were me, and it's not, I would just erase Iran. That would solve a whole lot of problems. Now, before I erased it, I would give every civilian an opportunity that wanted to leave the country the opportunity to get out of the country. But the mullahs and all that, just erase it. New York City's trend. Have you ever been to New York? You ever ridden in a subway in New York City? It's quite an experience. And there's some great entertainment down there too. A lot of blues music. It's the way the sound bounces off the walls, and of course it's very cavernous. Anyway, New York City's transit system plans to borrow against real estate taxes it receives to help raise $2 billion for infrastructure upgrades, creating a new borrowing mechanism that's separate from its traditional fare box credit. The Metropolitan Transportation Authority, the nation's largest mass transit network, is slated to start selling debt backed by real estate transfer tax receipts, a so-called mansion tax, later this year or in early 2025, according to the MTA's chief financial officer. The state began allocating the mansion tax revenue along with city and state sales tax receipts to the MTA in 2019 to help fund necessary capital projects and service improvements. The transit agency collected $345 million of real estate transfer tax revenue in 2023 and anticipates receiving a similar amount each year through 2028 per the MTA's latest financial plan. Is this going to blow up in everybody's face? Well, think about mortgage-backed securities. Gold continued its march lower. today, while global equity markets seem to have steadied a little bit. Spot bullion was down about 1%, falling after U.S. data showed a June trade deficit of $73.1 billion, slightly larger than the median estimate of 44 economists. The drop follows a 1.3% fall on Monday amid broader market chaos. A rebounding U.S. dollar and a pullback in expectation of rate cuts by the U.S. Federal Reserve are also weighing on the yellow metal. Meanwhile, exchange-traded funds added 125,000 plus troy ounces of gold to their holdings in the last trading session. Total U.S. household debt edged up in the second quarter, but overall delinquency rates have stabilized, indicating that borrowers are still in decent enough shape to support the economy. Now, that's according to a report from the Federal Reserve Bank of New York. The bank report, part of its survey of household debt and credit conditions, showed that overall debt levels rose by $109 billion, or 0.6%, in the second quarter to $17.8 trillion. Overall borrowing levels are now $3.7 trillion above where they were at the end of 2019, before the onset of the coronavirus pandemic. The data arrives at an uncertain time for the economy. The Federal Reserve raised its benchmark interest rate to 5.25% to 5.5% from near zero between March 2022 and July last year, where it remains in order to quash high inflation. Borrowing costs overall jumped in lockstep. The economy remained resilient amid a high savings rate. I call it reading the news. Sometimes I feel like I'm doing a comedy skit. Artificial intelligence stocks, a hallmark of the recent bull market run, have lost steam over the past month. Nvidia, Microsoft, Alphabet, and Amazon are all down more than 15% over the period amid a broader market sell-off that's seen the NASDAQ composite decline more than 10% and the S&P 500 more than 8%. Even as investors have begun to question recent earning results from the group, some strategists don't think this is the end to the AI run. I don't either. We keep our overweight to U.S. equities driven by the AI megaforce and see the sell-off presenting buying opportunities according to BlackRock Investment Institute. Recession fears have driven the market lower as investors speculate over whether the Federal Reserve is keeping monetary policy too restrictive. BlackRock describes these concerns as overdone. We think growth will be supportive of risk assets and believe markets are pricing in too many Fed rate cuts. So there's the news that's fit to read. Let's take a look here at Logic 247. This recap is valid through 11:30 a.m. Eastern today. Thank you, Valerie. We're currently in week 314. Over the last 314 weeks, we've issued over 17,400 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 38 alerts, still waiting on the outcome of 12. That gives us 26 actionable alerts, of which so far nothing has been stopped out. Back a couple months ago, we had an entire week at 0%. That's highly unusual. As I said, over the last 314 weeks and over 17,400 alerts, what we've averaged on a weekly basis is 20% or less. The week is young. Now, the logic alerts are not created for you to simply trade so that you don't have to worry about learning how to trade. They're a tool to help you learn how to read the chart so that you're able to know where to expect support, resistance, and to help you find windows of opportunity. And that's exactly what they will do if you use them properly. If you don't, well, that's a shame. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. The CTAs, on the other hand, are published as a static report shortly after the Globex open each evening. Last night, it was 5 minutes after the market opened. All of our members and trial members had each and every one of these targets. Now, in yesterday's broadcast, I went through the individual logic alerts just to make sure you know what they look like. Every logic alert has an entry price, whether it's a long or short trade, and then an initial target, which is designed to help you get your goal for the day, and then usually additional targets, sometimes quite a few, and then a final trade to target. The CTAs, this is where you find out if you've used logic properly and have actually learned how to read the chart. When the report comes out, the first thing you do is go to the 30-minute chart of whatever markets you actually trade. And on that 30-minute chart, make a note where price is at the time the report is published. It's always going to be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's trying to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is the green line you see on all my charts. It stands for bull, bear, cross. No matter what time frame you apply it to, if price gets above the green line, then we're bullish and anticipate higher prices. If price gets below the green line, then we're bearish and anticipate lower prices. Always relative to whatever time frame you've applied the BBC. For the purpose of the alerts, both logic and concierge, it's always the 30-minute chart. Nothing magic about 30 minutes, it's simply the time frame I chose many years ago, and if it's not broke, leave it alone. Now, this is where you look left yourself. See, with logic, I looked left for you and taught you how to look left to spot potential obstacles, which become targets, etc. The CTAs, now this is your next step. in the process of learning to read price action. And at this point, you should have a pretty good handle on how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Published the zone since December 14th of 2009. So this December will make 15 years. The weekly trading zones are published Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. Beyond that, just try not to complicate things. As long as you know which way the wind is blowing, it's pretty simple. Reach your goal for the day. Okay. We're above that 62% fib retracement. Okay. These are the fib extensions. These are the fib retracements. Here's the 24, 38, the 50, the 62. We spiked the 62, but we sat for hours at this level right here. See the bullish cross? When the blue line gets above the green line, that's a bullish cross. Okay. When you have a bullish cross, you anticipate higher prices. Price rarely moves in a straight line. You get a leg and a retracement, a leg and a retracement, a leg and a retracement, and eventually, now even though the pullback holds more often than not, whether it's pulling from below or above, pullback holds more often than not. But eventually it's going to trade through, as it did here. And when it found support at the 24% fib retracement, that bounced it up to the VVC and the 38% fib extension. Now, when we pull from above, we expect it to hold. When we pull from below, we expect it to hold. Leg retracement, leg retracement, leg. Now, we spent a lot of days here with the 38% fib retracement as good support. And then we caught a rally up to the daily VBC. And we ran into the bearish cross. Just as the bullish cross, which leads to an extended move, first time price revisits that area, it's good support. The same is true of a bearish cross when the red line gets below the green line. Okay, so those are both great examples. Got below the 62% fib retracement yesterday in that big sell-off. You can see where we closed the session a little above this bullish cross. Okay, and the low of the day is just above that area. Now, how we close today will be very important. Yesterday's high, 53.45.5. That's good resistance. Then you've got the 50% fib retracement at 53.70, also potentially good resistance. As we move into the afternoon, unless buyers continue to buy, because it takes financial commitment for price to rise, we're going to see price slip back below the 62. So all it takes is time. We'll know where we close at 5 p.m. Eastern today. Now, the daily chart's important for gathering information. Institutional traders, the ones who trade in immense size because of their huge account size. They're the ones that actually move price. And they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has to do with account size. So whether you trade futures or stocks or crypto or Forex or ETFs, if you'll make it a part of your daily routine to simply spend a couple minutes with the daily chart of whatever you're going to trade, what you're doing is you're literally looking over the shoulder of the deep pockets. And once you understand how to read a chart, then it's far easier to forecast what a professional trader is going to do than a retail trader. You're able to identify important areas of resistance. Right now, first resistance is the high of the day, and we have the high of yesterday, and then we've got the 50% retracement. You won't see that on your range chart, okay? Support, well, we know based on what happened yesterday that this area right here, still potentially good support. That's if we were to break the low of the day. And then the low of yesterday, okay, that lined right up with these lows over here. Market drops faster than it rises. Again, takes financial commitment for price to rise. But all it takes for price to fall is for the institutional buyers to hit the pause button. That's when the institutions that specialize in short selling come out of the woodwork and start driving price down. Lag retracement, lag retracement, lag, and we're trying to put in a retracement. So obviously we've gone from an uptrend to a downtrend. Price could rally all the way up to the daily BBC, and as long as the pullback holds, we will remain in a downtrend. Okay. Now above that 50% fib retracement, you've got the step line and red and falling, and they're really hugging each other tight. So I could possibly see a scenario where we take out yesterday's high, spike the 50, run into these guys, and then catch another leg down. One of the articles I just shared with you said they don't think the routes. So we shall see. All right, all alerts are created on the 30-minute chart. The vertical line separates today, Tuesday, from Monday. This was the Sunday night gap lower open. So 5 minutes into the life of this candle last night, that's when all those CTA targets you just saw were published. Okay, so we got a leg and a retracement, a leg and a retracement, and a leg that took us to the target and then through the target. And we missed hitting the weekly zone by just a little bit, 2.5 points. When the market finds resistance, it's going to go look for support, which it found at the BBC. Initially, it found it at the target. And we bounced, but we had blue and climbing directly above price, and that often becomes resistance as it's on its way to becoming red and falling. Keep in mind, these are 30-minute candles. So price comes down to the BBC, bounces, can't break through, so it's got to go look for support. BBC holds here, and it holds, and it holds, and then it can't hold anymore. But notice what you've got. Price, step line, red and falling. Perfect stack you hear me talk about. So price comes down to the weekly trading zone. where it consolidates. Only 3 things happen at a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. See how this candle sliced through that zone like it wasn't even there? When that happens, typically, when the slice runs out of steam, price will retrace back to the zone it sliced through and then continue in the direction of the slice. So we found resistance at the zone, 5308, and we found support today at the zone 5251/52. Keep in mind, zones are an area just like fibs. They print an exact price point on your chart, but it's an area. You've got to look at market structure. Okay. Now these lows here, see where the step line crossed right here? Okay. Should always expect that to be support until proven otherwise. Also, over here, you see how the step line crossed red and falling? That's an indication that price is going to pull back to the BBC, just like it did. See, step line's on the left side of red and falling, crosses over, retracement, and a leg, support. Okay. Support right here. And now we're consolidating at the zone, 5308/59. On the Dow, here's where we opened last night at the zone. Slid sideways for a few hours, and then here it comes. We hit the long target. Now this candle here opened at, we'll call it 39,070 to be conservative. So about 80 points up to the target, and then some. Now you can see that this high ties right into that high. Okay, it's market structure. Resistance sends a market looking for support, sends us to resistance, sends us to support. Support sends us back to resistance. We almost made it to the short target. But buyers came in early. Okay, we expected price to reach this low. Buyers didn't want to get left behind. Now this was a red candle all the way down. So, I mean, there was plenty of room in that candle to get your goal for the day. Then we reversed. Traded through the BBC. Now, look at the horizontal line on my cursor. See where that resistance came from? It's right there. See it? Okay. Resistance sends the market to support, BBC. Support will send the market looking for resistance. Take out this high, then we've got the zone right overhead. Remember, once the zones are published Monday morning, they don't change any whatsoever throughout the week. On the Russell, here's where we opened last night. Ran up to the zone overhead, consolidated for a couple of hours, and then off we go, up to the long target. This candle here opened at, well, I guess it opened. Most candles do open 2085, ran up to 2091 and beyond. So that's 6 points. You only need 2 points to get your goal for the day. Okay. Now, once you took out these highs right here, you could have entered here, but if you waited for this candle, again, more than 3 times what you need for your daily goal. Now blue and climbing gets above price on its way to becoming red and falling, which puts downward pressure on the market. So we get a leg, a retracement, and a leg that hits the weekly zone to the tick, just like yesterday. So yesterday we had resistance at the zone, support at the zone. Today support at the zone. Now on the way back up, we managed to trade through the zone. We hit that long target a second time, pulled back to the BBC in blue and climbing, and now we're attempting to make a run. We're sitting right on the weekly trading zone, 76/77. 2088 to 2091, that would be 3 points. Okay. What do you do right now? Nothing. You're above the BBC, which means you're thinking higher prices, but you're printing a red candle. So you gotta wait for that to reconcile itself. On the NQ, we had drawn in this window of opportunity yesterday during this afternoon broadcast. Price came down to the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC, simply bull bear cross. Bearish below it, bullish above it. And as you can see, the pullback holds more often than it doesn't. So we filled that window last night, and when a window fills, price will often back up and fill it again. And it did. And that took us all the way to the long target. Sideways, got blue and climbing overhead on its way to red and falling. And that takes us right down to the zone support. Resistance always sends a market looking for support. Back to resistance, back to support, and now back to resistance at the trading zone. Or not the weekly zone, but the long target. Okay, we still got a couple markets to cover, and we will do that. But now Michael's going to give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes, do some live trading. Then I'll be back, finish the alert recap, and wrap things up. Our good word for today.
And here we go.
All right, looks good.
Excellent. All right. Good afternoon, everyone. Today is Tuesday, the 6th day of August, 2024. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com and click on this purple button right here. And when you click on that, you will be sent to the registration page. On the registration page, we'll notice that there is no credit card required to take our trial. Go to the registration page. It's right here. And all we ask for is your first name, your last name, your email, your phone number. This is not the registration page. This one. All we ask for is your first name, your last name, your email, and your phone number. And there are 5 multiple choice questions. And if you have a Ninja Trader, give us a machine ID. If you have TradingView, give us your login ID. Click on the register button. Once you click that, you will be sent everything you need to get into the room in the morning. And also, if you give us that information, we'll be able to enable the indicators for you so you can get them indicating on your desktop. That's really where you want to be, right? All right, so this morning, I had a little bit of an issue right before the start, so I didn't get there until like 2 minutes before the start, and it threw me off a little bit, and I was not able to take any trades in the pre-market, and then when the markets did open up, I had changed everything back to the smaller time frames, which was not good for the way the current markets were at the open. So I had to switch them to larger time frames. And I started out with the 35 tick stop out on the YM. so it took me a little while to get the goal for the day this morning. Now, if you're looking at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today it took 33, and we made 33 ticks on the Russell. We lost 35 on the YM, made 24 on the ES. Put us at plus 290 in the morning session. Today it took 32 minutes and 11 trades. 35 tick stop out. I had a couple of the stop outs too that I had to make up for. But 32 minutes and 11 trades to get to the goal for the day. At that point, we're up $3,400. We took a total of 16 trades. Now, the $3,400 is with 20 contracts on. Right? We had $170 a contract is where we were at. So on the month now, we're at $3,695 with one contract over 4 business days, averaging $923 per contract per business day. On the year, we're at $61,647 or 145 business days, averaging $425 per contract per 2-hour business day. If you were to quit trading when you get your goal for the day, and you were to add one contract per month, so far this year, you would be trading 8 contracts right now, and you'd be averaging $1,710 per hour, right? If you were to start last year with me at the beginning of January and manage to do everything just like me all the way through, you'd be on your 20th contract right now, the end of the 24/20 blueprint for me. The 20th contract right now, and you'd be averaging $6,945 per hour, right? Either way, this year you would work 47.16 hours getting your goal for the day. 47.16 hours, all right? Let's get into it. Now, I didn't even look at the NQ really after the morning. Now, when it first opened up, I looked at it for a few minutes, and I decided we weren't even going to try with the NQ today. Too much of a spread, too many ones and stuff like that in the sums. But we did take a shot here with the YM, and we took one shot with the YM right here, and it stopped me out minus 35 ticks. After that, on a larger time frame, we didn't get that many opportunities. It was a blue arrow here and a green arrow here. I think I was in the middle of training at that time and I didn't get either one of those. There was a green arrow over here that I didn't get, and purple arrows worked out just fine. Not that one. That one would have stopped. Yeah. But remember, I'm with a 30. It's a 29 range actually. With a 29 range chart, we're using a 35 tick stop with a 50 tick target. And I probably would have bumped the target out some if I'd gotten any more trades in there. I don't know that I would have done that, but I definitely would have been trailing my stop like plus 20 as soon as I could. As it was, we had one more trade in here. This is one of the ones that I probably would have trailed my stop to plus 20. And we had one right here that, it went from 312 all the way up to 351. So that's almost 40 ticks right there. And I definitely would have been trailing my stop in that one too. But we just got the one stop out on the YM. We actually traded 3 times. I don't show the other 2 break evens, but we did get the one stop out in there. Okay. And on the Russell, we had the majority of our trades were on the Russell today. The majority of the trades were on the Russell today. Now let's scroll back here. Go all the way back here. There we are. All right. So the first trade we took on the Russell right here was a break even. You see, I only have the BBC and the BB3 shown in there. That was from the lesson plan today. All right, but the first trade we took in here was a break even trade right there. The next one we took in here was another break even trade. And then the next one was right here. We had a plus 9 on that. There's something missing in here. I had a plus 9 somewhere, and I got the plus, I think this was the plus 30, and that put me at plus 39, and then I stopped out on this. That put me back down to 19. Now, this was all during the lesson plan. All this happened during the lesson plan. So I had plus 9 leading up to that. Somewhere here, one of these might have been a plus 9 of the other ones. But anyway, I stopped out on that. That was minus 20. That put me down to 19. Then somewhere in here during the lesson plan, I made a little bit more right there. That put me up to 23. I had a 4 tick gain there. Then I stopped out there, and that put me down to 3. And then I had a 30 tick gain right there toward the end of the session. That put me back up to 33. And that's where we ended up with the Russell today. Now, all of this stuff from here over to here was all during the lesson plan. That all happened during the lesson plan. So the lesson plan was actually really cooperating today. The markets were cooperating with my lesson plan. I was explaining in here how we needed to extend down beyond this leg length using the diamond principle, it should have gone to here and then should have gone to here. And if it didn't go to here, we're probably going to be in some chop, and we had to wait until it extended down below this level right here. So you'd almost hit it right there. Until it extended below that level before we could take another trade. And then we were fortunately, well, not really fortunate, but we were going into the weekly trading zone. I was able to explain how to use the weekly trading zone, how to not react with the weekly trading zone being right there. All in real time, live in real time. And it all worked out just right. We had this one trade right here that I was able to get into and pick up a little bit of profit on. And then this one right here, that was a good trade to take. It was exactly what I was hoping for. And I ended up stopping out on it pretty much to the tick. Then it ran down. And I talked about that some more and how the leg lengths were and how we should complete this leg length. And it gave me this opportunity right here that did complete that leg length. And then the last thing that I said was the pullback should be proportional to the leg length. When you get a big leg length like this, it extends beyond the leg length size. Usually that's going to mess things up, and we'll get into that tomorrow's lesson plan. And that did mess things up. See, I went sideways here for a really long time. And I'll get into that tomorrow, right? But on the Russell, we ended up with a plus 33. Most of it happening during the lesson plan. During break, we had a couple of green arrows in here. Now remember, the green arrows have to complete the prior swing high. They have to get up to the prior swing high. And remember, the diamond principle should have put it right up here into the ribbon, right? I mean, into the weekly trading zone, which it did finally do way over here. Right, then it pulled back and did it again. Remember, the diamond should be right up here, which it did do right there. Did it again right here. The blue arrow, remember the same thing. Diamond should put it right up here. And it looks like it did it right there. All right. Green arrow here, diamond. Didn't get up there. Didn't get up there. No more trades after this. Right? You guys that were in the lesson plan this morning should understand what I'm talking about. And as we move forward into the bigger time frames and stuff like that, it's going to be important that you understand all that. Okay, let's hit Alt and Lift. And those of you guys that are on the trial, when I was going over the cost per tick this morning, which is part of the lesson plan, the whole cost per tick thing. That's using these. There's a micro of this that is 10% the cost per tick. So you're not risking so much. You're risking, as a matter of fact, 1/10 of the amount on every trade. And if you wanted to trade the micros, we're going to get into that as we move forward. I want to complete the 24/20 blueprint, doing what I started the 24/20 blueprint with. And the micro market, it was created and it matured in the time it's taken me to get the 24/20 blueprint done. So that's all good stuff. All right. So on the ES, we didn't have that many trades with the ES. Well, I guess we did have quite a few. Now that I look at it, we had our very first trade here on the ES. This is where we got the goal for the day, I think. No, this isn't. It was the next trade on the ES. We got 9 ticks profit on that one, and then we had a break even there, and then we had actually it wasn't the next one. We had 9 ticks profit there, then we got 3 ticks profit on this to put us at plus 12, and this is where we got the goal for the day on this one right here. We had 12 ticks profit on that to put us at plus 24. And that was all the trading we did on the ES this morning. All right. Now, those of you guys that were watching the lesson plan this morning, you can see it has very little follow through here. The completion of the diamond was just not happening very often in here. Okay. So very little follow through. And there were some more blue arrows. That was okay, but it didn't put in a lower swing. So no trade after that should have happened. This was okay. It did put in a lower swing, so you could have taken a trade after that. It wasn't in no trade zone. This had the pullback, and it finished the whole diamond principle right here. This to here, down to here. All right. What I'm talking about? What I'm talking about is this is the whole principle. These are your points of interest. All right. That's what you're looking at. Now, something just occurred to me. Two things just occurred to me. I won't get into it right now. Maybe in the partners meeting on Thursday, if I remember. Remind me of the partners meeting on Thursday. Reflection points. Those of you guys that go to the partners meeting. Anyway, this got down here to complete the principle. Now this is, I eyeballed that. It's probably exactly completed the diamond principle here. All right, this is the leg length from here down to right there. So it probably exactly completed that from there. That's it. No, I guess I eyeballed it pretty good. It needed to go down just a little bit further right here to complete it. But it did go deep enough to take another trade right here, which would have given you a break or a little bit of profit in there. Now, I didn't trade in there, right? I didn't take any more trades in here. Let me erase all the trade objects. There was another blue arrow here. This was toward the end of our session this morning. A double blue arrow in there. That did go down enough to get some profit if it didn't stop you out right there. But that was during the break, and I didn't take that. In here, blue arrow here, went right up to the zone, bounced off the zone, blue arrow here coming onto the zone. And a blue arrow here that would have stopped you out. Or stopped me out, for sure. Okay, and that was what happened this morning. So, here it is. We'll go back here right now. We'll cover this again. If you are going to read the spreadsheet, you read all CFTC risk disclosures down at the bottom. Today is the 6th day of August, 2024. Made 33 ticks on the Russell. We lost 35 on the line and made 24 on the ES. That put us at plus 290 in the morning session. Today it took 32 minutes and 11 trades to get to the goal for the day. At that point, we're up 3,400 into a total of 16 trades. So on the month, we're up $3,695 over 4 business days, averaging $923 per contract per 2-hour business day. And on the year, we're at $61,000, $61,647 for 145 business days, averaging $425 per contract per morning session. Right now, in the morning session, I'm actually only trading probably 6 hours a week. So it's not the 20 hours a week that you would normally think. It's probably like 6 hours a week, 6 or 7 hours a week is what I'm actually trading. So those are pretty good numbers. You consider it. These numbers over here, they're the same as they, well, the same as they were the last time I discussed. And I described them. If you added 1 contract per month, you started January with 1 contract and you added 1 contract per month, and you quit trading when you get the goal for the day, and you did everything just like me. So far this year, you'd be on your 8th contract right now, and you would be averaging $1,710 per hour. If you started in January of 2023, like I did, you'd be on your 20th contract right now, and you'd be averaging $6,945 per hour. Okay, that is the way it's working out. Now, let's get into some more trading right now. Okay, for those of you guys that are watching YouTube, if you just come in on YouTube and you haven't taken a free trial with us, go to mytradingiq.com, click on the purple button right here. Right, there's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page, where all we ask for is first name, your last name, your email, your phone number, 5 multiple choice questions, and down here, if you have NinjaTrader, give us a machine ID. If you have TradingView, give us your login ID. If you have NinjaTrader, you should take a trial in TradingView and give us your login ID there anyway. All right, we have more stuff available in TradingView than we do in NinjaTrader. All right, now into trading. So over here on the YM, we're on the 29 range. That means they have a 35 tick stop. We're in the oversold. We're just about hitting the ribbon. We're coming off the weekly trading zone. It looks like it's probably going to try to make it above the zone again. So we're going to go 30 ticks above this. 61 up to 91 is what I'm going to buy right now on this. Now, it'll be a black arrow on an up close. So with the black arrow not coming off the ribbon, I almost want to wait for it to pull back down halfway into this, right? Now it gave me the black arrow. That's what I was expecting. And I kind of want to wait for it to pull back down halfway into this. All right. I think it's going to go up to the zone. We have a double top up there at the zone right now. I think it's going to go up and making the shot at it. I'm just going to jump right here. Okay. Jumping. I jumped. Here it is. Okay. Now I think it's going to pull back down to like right here, probably 74. Right down here. That's what I was saying. I would wait for a pullback halfway down the arrow, right, halfway down that bar. That way, if it does if I were to enter there, and from there, if it were to pull back into the ribbon and then give it up close without hitting the black line, I'd have a great entry on the blue arrow. But as it is, I'm in on the black arrow because it was pretty close to the ribbon, so I'm in on the black arrow. And my stop from 93, my stop puts me all the way down here at 56. 56 is in the ribbon right here. Okay. So after I get 10 ticks in profit, I'm going to bump the stop to break even. Now, we haven't had that yet, but if it gets up to 403, I'm going to bump the stop to break even. Okay. And the other markets are kind of going sideways right here. They're not really helping this one. So we'll see. We'll see what happens with it right here. I mean, it's possible it'll stop me out for full 35 ticks, but we'll see. My entry was pretty good. I'm in at 93, and the exact entry spot would be 91. So it's not too bad. Only a couple of ticks to slip. All right, it's got to get up to 03 right here, and I'll bump that stop to break even. One more tick, there it is. Okay, stop's going to break even. And now what I expect is it's going to get up to the weekly trading zone. It has to exceed the prior swing high, right? So from 23, that would be 30 ticks if it exceeds the prior swing high, 30 ticks in profit. At that point, I'll be locking in some profit right now. Okay, for right now, the stop is at break even, and I'm going to leave it right at break even for right now. The high of the day is right here. I expect that's where it's going, and it's going to try to get through the high of the day, even though it just took me out at break even. I expect that's where it's going. It's going to try to get through the high of the day. The other markets they're all calm right here right now. You know, we could bump this back down to a smaller time frame now that the markets are not crazy like they were at the open this morning. All right, and we're expecting that to move up. The other ones are in no trade zone, so we don't have anything that we can do with those. Right? I want to check and see what is in here today. All right. So we're almost up there right now. There it is, up to the prior swing line now. And we should get through that. Okay, should get right on through it.
Americans have been told to get out of Lebanon immediately.
Yeah, I thought they were told that on Friday.
Yeah.
Maybe they didn't have the word immediately on Friday. They had the word immediately today.
Yeah.
Yeah. Let's see what happened. Gonna get us into World War III with Kamala at the helm. That's what you need. Oh well.
These ruthless dictators around the world, where they're just licking their chops.
Oops. That's not what I meant to do. All right, we're still looking for the higher swing over here. The other two markets are in the no trade zone, so we're not going to have anything with that. We're still looking for the higher swing over here. Now, we ended up with a break even on this, but it did go almost 30 ticks, 20-something ticks. And it's a 29 range, so. Sideways action here, and we want to see that punch through that weekly trading zone. There it goes. Just about there. Now, reading the DOM. Reading the DOM. So the DOM, it's saying right now it wants to go up to 435. Is what it's saying right now. Okay, that's what the DOM's saying. You don't have any reason to enter a trade right here, but it's saying 435 is where it's trying to get up to. Now, if I would have waited for that pullback, like I was talking about earlier, if I would have waited for that pullback, I'd have gotten an entry way back here. And I probably would have done more than just take a break even on that. I probably would have locked in a little bit of profit on that. I was trying to discuss that or show that this morning in the lesson plan. But that part of it didn't really create itself while I was doing the lesson plan. Everything else that I was trying to do this did happen during the lesson plan though, so it was good. It was fortunate. Now 435 is what I just said, right? And what do you got up to so far? 433. Now I like 440. 440 on the upside. The pullback number is 416, 415. The pullback number is 16, 15. The pullback number is and 440 is the number on the upside. We have to close above this weekly trading zone really to start moving away from it. The markets are really calmed down here. I could probably go down to a 7 range on all these and still be tradable right now. Look at that chop though. Wow. Yeah, that's not pretty there on the Russell. It's not pretty over here on the S for sure on the 7 range. And the YM on the 7 range is probably pretty ugly too. Yeah, it's just a slight upward movement here on the 7 range. That's a huge difference. 7 down to 29. Huge difference. But if it warrants it, it's worth taking a shot. Oops, I just looked at it. I was looking in here. All right. We're in a no trade zone here on the so we're not going to take that. We are completely flat on the Russell. We're not going to do anything with any of this right now. So we can go look at other stuff. Let's go look at other stuff. Go here and look at the Bitcoin today. All right, the Bitcoin had a little bit of recovery today. It didn't end yesterday at the low of the day. It ended right in the middle of the day. So this is a bit of a recovery here on this. That's good. Now where should it find resistance? Probably right here at this yellow line that I have drawn here. Find resistance right there. All right, that's Bitcoin. I haven't looked at Ethereum in a long time. Not futures. Not futures. Let's go to crypto. All right. It looks almost the same as Bitcoin. Ended in the middle of the day, in the middle of yesterday's day, and it's got a little bit of movement up right here. Now, this triangle that we drew a while back, we were looking for the breakout of the triangle. Wherever it broke out was where it was going to go, and that certainly was the case. So if we slide this over a little bit, and we use the normal leg length stuff that we use in the morning session, this was a leg length we were looking at on the upside, but we can use that same leg length on the downside. Okay. Now this leg length was created from prior price action on the upside, but let me put it back here. All right. So we'll be able to use it again in a little bit when it does start going up again. Okay. Let me make a copy of that and paste it. Paste it. Okay. So now I can take one of those and move it over here. The same leg length on the downside is usable. Okay. So if we look at that and we look at where it put us right here, that leg length on the downside. You guys follow the logic with that? It's in Wednesday's lesson plan, the leg length stuff. The same leg length on the upside works on the downside. Okay. You see how we were expecting that? If it was going to go up, we were expecting that. Then we got all this sideways action. We got into this triangle period. And I said, when it comes out of the triangle, whatever side it comes out on is where it's going to go. But I hadn't figured it was going to come to the downside. But this is what I would have been able to say back then if I'd have thought it was going to come out on the downside right here. I had drawn this in here, which was kind of a ballpark. But this is where it should have gone and got right through that by a couple of ticks. You guys see all that, right? It's the leg length stuff that we do in the typical Wednesday lesson plan. Just playing itself out on a daily chart. It's the same stuff again and again and again. Over and over and over.
Tomorrow, Morgan Stanley will start pitching clients to buy Bitcoin ETFs by BlackRock and Fidelity.
So this
Morgan
whole
Stanley's
thing right now,
got a whole lot of brokers.
Yeah, this whole thing right now where it's down this low is probably a great buying opportunity. Even for options on futures and options on crypto, if there are such a thing. Right here is probably a good buying opportunity. The NQ, I haven't traded the NQ yet today, but it's this blue arrow here. Didn't put it in a higher swing, so you can't take the green arrow, but it should move up above the prior swing high. And that's what I think everything is having trouble with right here is that prior swing high. I don't know if they're all at the high of the day right here, but I know that that's the issue with this one. Let's go back here to this. And there is So it's now 125. It's still struggling over here to make it up. I could have taken this blue arrow right here, but I wasn't looking at it. I could have taken that blue arrow because we did put in a higher swing, so we would have taken that right there. It should put in a higher swing right now. It just like everything looks like it's really having trouble here where we are with the markets. Just trying to see. This guy. Okay, we need that to get up above right there. Just going sideways here and here. And we have nothing happening here right now. I was taking a look at the NQ and see if there's anything tradable over there. There's not. It's this blue right here. I had to put in a higher swing. What time frame are we on with that? Around 100 range. Okay, so maybe that's why the blue right there had to put in a higher swing. Let's break that down to a smaller time frame. Let's get a multiple of 4 on that. We'll go to a 31 range on that. Okay, so in the 31 range, it doesn't have any trades in here either. And I'm not sure why. It's probably because the sensitivity should change. But I don't see, there's the blue arrows and green arrows. Okay. We don't have any trades there either, even on the 31 range. So we'll go back here and just wait and see if anything happens here. All right. Well, we're waiting. It's waiting. I don't know, guys. We don't have anything else here. We have like 30 seconds left. We just about have a higher swing there. If I had taken this, we'd have been in some profit. I'd probably bought my stop to break even, and we'd have gotten out of break even right there if I'd have taken that for sure. Let me give you this. If you have not taken a free trial with us, I know we don't have a lot going on here right now, but if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right there. There is no credit card required for the trial. When you click on that, you'll be brought to this registration page where we ask for his first name, last name, your email, your phone number, and there are 5 multiple choice questions down here at the bottom. If you have an Ninja Trader, give us your machine ID. If you have a trading view, give us your login ID. If you only have Ninja, you should take a trial with TradingView. You can get to the trial with TradingView by going to the trading platforms page here from mytradingiq.com. Go to the trading platforms page, just follow the instructions right here for a trial with TradingView. Okay. All right. That is it. With that, I guess we'll pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep.
Okay, and we finally did break up above everything over there on the YM. It's finally getting saturated.
Okay, recap of the morning session.
Today it took a little longer than normal. It took 32 minutes and 11 trades to get to $3,400.
Good job.
Thank you. Thank you.
All right, guys, we left off with the NQ, and we were approaching the long target, or we had just come the long target. This is where we opened last night. Fill the window that we drew during yesterday's broadcast. Long target. Back to the BBC. Price always reverts to the mean. We bounced, and because the step line was directly overhead and above that red and falling, that put pressure on the market, sent us back down to the weekly zone. Support sends us to resistance. Resistance sends us back to support at the zone. So we made an attempt to get above the BBC and failed. Found support at blue and climbing, and that took us all the way to the zone. So we consolidated at the zone. Got a breakout here that took us up to the target, and then a retracement and through the target. Okay. Now this one green candle right here on the NQ. It opened at 334 and ran to 446. Let's just call it 100 points. It's $2,000 per contract traded. Now, this gap from Sunday night has still not been filled. We opened Sunday night at 18,390, and Friday's close was up around 18,515 or so. Because I have this vertical line here, I can't get a read on that candle, but you can see it. It's right there. Support always leads to resistance, which leads back to support, which leads to resistance. Okay. Now, we took out this first high of the day in the NQ by just a little bit. And just a little bit is cause for concern. Now, this candle still has 27 minutes left in it. It could run up and fill that gap from Sunday night. However, you'll notice that the step line is starting to lean to the right. That's because of the market's consolidating sideways. If the step line crosses blue and climbing, then instead of looking for a gap fill, look for a retracement back to the zone and then the BBC. Now, if we were to trade below the BBC, right here you've got a bullish cross. So you got potential support here. Actually, you got it here. You have 4 layers. 1, 2, 3, 4. Make that 5. Okay. So the path of least resistance actually is up, but it takes financial commitment for price to rise. So let's see what happens. Covers all the indices. We're now on crude. This is the window of opportunity we drew on crude yesterday during the broadcast. And as you can see, we did fill that. This was the opening candle last night. We're above the BBC, we're above blue and climbing, and we ran right up to the target. Now, it was 5 minutes into the life of this candle that the targets were published. So, candle opened at 73.86. So, call it 74, just to be conservative. That's $450 plus per contract traded. We actually ran up to 55. When the market finds resistance, it's going to go look for support. This time, over here, look at all the times that the pullback held and it held. And when we were pulling from below, it held and it held and it held and it held till it didn't. But once it got above and pulled back, and it held and held and held and held. But we know eventually it's going to trade through. When you have price coming down to the BBC with red and following very closely, that's usually a good indication that this could be the one that doesn't hold. Now on this run up today, take notice, this bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it has been. Just like we were looking at earlier on the daily chart. So we came down to the zone, down support, caught a bounce, ran into resistance. We've now pulled back to the VBC. We put in a lower high. Pull back to the VBC and put in an even lower high. So we've got a high, a lower high, a lower high, a lower high, lower high. Step line is crossing blue and climbing. I suspect crude may drop back below the BBC. And if so, a nice opportunity would be 72.85 to 75. That gives you your goal for the day. And then there might be another $200 on the table if it goes all the way back to the zone, 72.50/55. Gold. Here's where we opened last night. Pulled back to the BBC, ran up to the zone, consolidated at the zone. Remember, 70% of the time when price encounters a zone, consolidation. Just like over here. Look at all these 30-minute candles that tried to punch through the zone. These earlier ones actually punched through, but they just failed. Okay. Came back to the BBC. And this little area right here created support here. Set us back to resistance. The market tried really hard to get back through that zone, but it couldn't do it. So we ate a leg, almost touched the target. What was the low there? 29.3. Yep. Here. So we bounce up, almost touched the BBC, but red and falling was enough, and that sent us all the way down to the short target. And the zone down here is 24.20.21. And the low was 21.8. So we missed hitting the zone by 8 ticks. Resistance to support. So the step line has crossed red and falling, so we expect price to move up to the BBC. And we always expect the pullback to hold until proven otherwise. Okay, so pull up, and maybe we get another leg to the downside. But if we trade through, make sure you're aware of this bearish cross right here. I would call it 22.6 to be conservative. Now, if you get above that, 49 up to 52, that would be $300 per contract traded. Silver open, looked like it was gonna run, and it didn't. Folded. Drop back below the zone, hit the target, continue down. As you can see, this low support sends us to resistance, back to support. Resistance where? At the bearish cross. Bearish cross, resistance. It's so important to remember, okay? So resistance sent us back to support at the BBC, and we've had some lackluster candles here. We're still above the BBC. We still have blue and climbing, but this may fold along with gold. If so, you only need 2 pennies in silver to get your goal for the day. So 26.90, 26.83. That would be $350 per contract traded. The euro opened last night, ran right into the zone, pulled back to the BBC in blue and climbing, hit the zone again, then blue and climbing turned to red and falling, and that walked us right down to the target, to the tick, out of bounds, and then traded lower, keying off this low right here from yesterday. Now, here you see how the step line on the way down, you had price, step line, red and falling, BBC. Once that step line crosses red and falling, then you expect price to retrace to the BBC, which it did. Now we're just consolidating sideways. And on the euro, it looks like we're about to head lower. I see blue and climbing, turning to red and falling. That should take us back down to this area, possibly this area from last Friday, in the zone. One last look at the daily chart. Okay, we're straddling that 62% fib retracement. Remember, next area for resistance, 53.45 half, 53.70, 53.93, 54.53. We've had a leg, a retracement, a leg. We're in a retracement now. Okay, market found support. This bullish cross. A price spiked it yesterday, but then it spent hours just sitting right on top of that bullish cross. So that support has now sent the market looking for resistance. Now, we've gone from an uptrend to a downtrend. Now, look how long it took price to go from 51.19 to the all-time historic high. Okay, from early April to mid-July, but in just a couple weeks, price falls faster than it rises. This takes financial commitment. This doesn't. So if buyers keep buying, you know the areas to watch. Okay, along with your weekly trading zones and market structure on your 30-minute chart. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI. If you don't get a human voice, leave a message and a human voice will call back. You can also email any questions you have to support@cfrn.net. When you become a passport holder, you'll have 2 hours of live training every trading day. Along with 2 hours of live training in an interactive environment, you'll have access to private one-on-one mentoring at no additional charge. The strategy you learn and the indicators you own as a passport holder, fluid across all markets and all time frames. Future stocks, crypto, Forex, ETF, doesn't matter, price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and you'll be able to attend the members-only workshop on Thursday night. Everything a trader needs, all under one roof, one low price. Our good word for the day yesterday was you must care for the needy. Today's part 2. When he was a theology student, Jim Wallace and some of his classmates took scissors to the Bible and cut out every verse about poverty, wealth, justice, or oppression. And would you believe it? By the time they had finished, there were some 2,000 verses lying on the floor. The fact is, when you cut concern for the poor from your Bible, you cut the heart right out of it. Here's one such verse, Jeremiah 22:16. He defended the cause of the poor and needy, and so all went well. Is that not what it means to know me, declares the Lord? Jesus often quoted scripture, but only on one occasion do we find him selecting and reading from it. This is when he stood up in the temple. The scribes and the Pharisees went nuts because this is what he read. Now, I'm giving you the Luke 4:18 version, but that hadn't been written in Jesus' day. So he's quoting from the Old Testament. The Spirit of the Lord is on me because he has anointed me to proclaim good news to the poor. He has sent me to proclaim freedom for the prisoners and recovery of sight for the blind, to set the oppressed free. Again, that's Luke 4:18. Jesus' to-do list is help for body and soul, strength for the physical and spiritual, and therapy for temporal and eternal. Now, some people, albeit a minority, are poor because they're lazy and need to be taught what God's word says. 2 Thessalonians 3:10. Those unwilling to work will not get to eat. But others are poor because parasites have weakened their bodies, or they spend 6 hours every day collecting water, or rebel armies have destroyed their farms, or disease has claimed their parents. These are the people God has assigned you and I to care for. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.